Hello Dairy Today viewers. On behalf of the Market 360 advisory team here at Stewart Peterson, I'm Tom Mongovin, and this is your week in review for the week of November 16th, 2012. First, let's take a look at our dairy components. Everything was down this week, so let's first take a look at cheese. Blocks down about 10 cents to 182.5. Barrels down over 11 cents to 172.25. Butter was down to 179.5, and whey and non-fat dry milk also lower on the week. On the milk side, prices took a hit this week thanks in large part to a sharply lower day on Thursday, which saw the December contract fall 72 cents. The 2013 average also broke the 18.50 support level this week for the first time since August. Taking a look at our closes after Friday afternoon's close, November down 4 cents to 20.74, December down 45 cents to settle just above 19, and the 2013 average to settle at 18.40 on the week, down 18 cents. The block barrel average was down another 10 cents this week as the weakness continues in cheese. Despite another drop in cheese inventories, as we will see shortly, the sellers this week had difficulty enticing buyers to step into the market. The chart now looks very different in the last 2 weeks, since the last 2 weeks have changed this bullish trend that we have been watching since April. Here's a weekly December milk chart, and you can see that after this week's weakness, prices are sitting right at that long-term support line that we can see that's been intact for the last 2.5 years. Here we go. Here's this week's trade, and we're sitting right at that support level. On the upside, the 2040 resistance level continues to be key. The latest report on weekly cheese inventory showed a sharp decline of 3.7 million pounds. That decline just about offsets the big 4.1 million pound increase as seen on last week's report. This week's sharp decline suggests that the prior week's big increase may have been just a 1-week anomaly related to Hurricane Sandy. And inventory is back down to the second lowest level so far this year in 2012. This inventory level is 8.6% below the level at this point last year. The number of dairy cows sent to slaughter in the most recent data stayed above the 62,000 head level for the 8th straight week. This week's report showed 62,500 head were sent to slaughter. Total slaughter so far this year is still up 6.2% higher than at this point last year, which is a difference of about 151,000 head. In the latest data, CME prices are now below Oceania prices. This has not happened in the last couple months, and it is a significant development. It is not surprising to see this, however, given that we were at a premium of about 30 cents just a couple weeks back. Also, in the most recent export data we saw negative year-over-year growth, so traders may have wanted to get our domestic prices more competitive relative to the international market. Taking a look at the week ahead, we have a milk production report coming out on Monday, a cold storage report coming out on Wednesday, and that will be it as far as trading, as the dairy markets are closed Thursday and Friday for the Thanksgiving holiday. Keep in mind that on Friday, the grain markets will be open a half day until noon Central Time. That will do it for us here. On behalf of the Market 360 advisory team here at Stewart Peterson, thanks for watching and have a great weekend.